to another video tutorial with Kukura Capital. Now in this video tutorial, we're going to be discussing what is Forex. Now I'm pretty sure you've all come across Forex in your lifetime if it came through an email or some advert, and there are a lot of myths and misconceptions because of the media perception of Forex trading. So in this video tutorial, we're just going to give you the fundamental basics and understanding of what Forex trading is really all about. Now please don't forget to give us a thumbs up if you like the video. Feel free to comment, we do reply, and hit the subscribe button so that you can be alerted every time we have a new video tutorial. And every week we do have a new video tutorial. And if you want to be the first one to know about it, you can also hit the notification bell so that you can also be notified when we do a new post. More than one. Alright, so what is Forex trading all about? It's the exchange of currencies, foreign exchange. So it's basically all the currencies in the world that are constantly being exchanged. Now the reason why it's the largest market in the world, doing a daily turnover of over $5.4 trillion is because as long as there's trade, money is obviously being exchanged, which allows the market to be highly liquid, which is to our benefit because we make money and profit off the constant fluctuations in the market. Now it's the simultaneous buying and selling of currencies. So that's why currencies are paired up together. So if you ever looked at a metaphor trading platform or any currency quotes, you always find that they're paired together, because when you buy one, you're selling another one. So that's why you always have USD ZAR, which is basically the South African rand, and the US dollar, the pound and the dollar, or the pound and the yen. Is never in isolation because it's simultaneously you're buying and selling the currencies. So we're going to discuss that in more detail. We have an example in this video tutorial to help you understand. Now I just want to draw attention to this $5.4 trillion daily turnover. So the whole thing with the Forex market, it kind of has this huge hype about like, oh, you can become an instant millionaire, and like all these Forex traders posting Ferraris on Facebook and all that kind of stuff, or on Instagram, and people have this misconception that it's overnight success, which is absolutely not the case. Now we've written a couple of articles. Also feel free to go get more material resources on our website, www.kukuracapital.co.za. We have a lot of resources to help you. There are people who do scam people when it comes to the Forex market and just trading in general, and we do try to give you some pointers to watch out and what like to be cautious of, and we do discuss this a lot in our video tutorials. And especially when it comes to Forex trading, trading lessons and sessions, people charge a lot of money, and actually they're trading demo accounts, so it's absolutely ridiculous. Don't pay for somebody who's using a demo account and doesn't have any credibility other than having like some random stacks of cash on their table. Don't fall for it. So that aside, what is the huge benefit of Forex trading? Now, other than it being the largest market in the world, the benefit of Forex trading is that you're able to benefit from the market regardless of whether it goes up or down. So if the market goes up, you can take a long position, which we also call buying, and you can benefit from the constant increases in the price. Or if the market is down, you can do some short selling, or we'll just take a short position, which is called selling or shorting. We'll discuss this in more detail in another video tutorial called how to place an order. Now that is our most important video tutorial, and in that video tutorial we discuss what a pip is, how to calculate the value of a pip, what volume is, all the fundamentals of placing an order, especially being able to distinguish between buying and selling. You really need to understand this in order to become a successful trader. Some people don't really understand what it is to sell, and they only take long positions, and obviously that will limit the success of their portfolio. So we discussed that you can buy and sell. The reason why this is a benefit, now comparing it to something like the stock market, it's very hard to short stocks. Now if you have a standard broker and a standard platform, you won't be able to take short positions. You'll only be able to take long positions, so you won't be able to benefit from a company not doing well or take a short position normally. So that's why it's more beneficial in the Forex market. If the market's going down, you can profit from that regardless. So opposed to if it's in the stock market and the market's been down, you're kind of stuck because you can only take long positions. But then again, stock trading for the long term, and we discussed that in our stock video tutorial series, and you can just check on our channel and you can find the video tutorials regarding to that. And all of these series are going to be constantly increasing with the video tutorials that are in them, because we're constantly posting a new video tutorial every Tuesday. So I've discussed that we can buy and sell in the Forex market. So the best thing about the Forex market, because it's 5.4 trillion daily turnover, obviously it has high liquidity, which means there's constant movement in that market, which is to your benefit. And that's actually what the next video tutorial is about, when to trade. You need to trade when there's volume, because you need to be where the movement is. You don't want to be trading in a market where it's only you, because you're not going to make any money. Now, other markets tend to be a little less liquid, less people are in them, so that, slows down the progress of your portfolio, how much success you're going to have. If you're in a very stagnant or quiet market, it's very hard to actually have success, because the money's made from the constant fluctuations in the market. And you're going to understand that more as we progress through the video tutorial series. Now, this market, the Forex market, or any market actually, is characterized by the tension and the fight between the bulls and the bears. Now, this concept of bulls and bears, you've probably heard of it or are not really familiar with it, but the point is, you need to write this down, you need to know it, you really need to understand bulls and bears, because later on we're going to be having a video tutorial which is about candlestick analysis. And candlestick analysis is a way for us to identify the market, who's winning, bulls or the bears. So if you don't even understand what the bulls do and what the bears do, understanding trading is going to be very difficult, especially if you want to be more reliant on technical analysis. So what happens is the bears push the market down by selling, and they create downtrends. So if you're in a bearish market, or we say, oh, it's a bearish market, it tends to mean things aren't doing too great. Everything, the stocks are going down, the market's down, people don't have jobs, everything's just pretty awful and grimly. Even though it's awful, you can still profit from that bearish market by taking short positions. So if you've identified that you're in a bearish market, that's when you start to look for short positions or selling positions. Now, in a bullish market, it's the opposite. You have the bulls who push the market up and create uptrends, and you have prices going up, and normally you get like market sentiment, which on the news you have people saying everything's great, it's just a great, everyone's happy during a bullish market. And during a bullish market, you tend to identify buy positions. You obviously wouldn't sell in a bullish market unless you're trying to be a countertarian, but we'll discuss that in another video tutorial. So the big question, the big picture, the main focus is, how exactly do people make money in the Forex market? Now, you're trading currencies. What exactly does that mean? It's not like you're trading stocks where you're buying actual equity in a company. It's completely different, and that's why people find it a bit tricky to understand. They kind of don't understand how they're trading currencies. So I'm going to use an example to really make sure that everyone gets a good understanding of what happens in the Forex market. So an example always is the best way to explain something. So in this example, we have this guy called Tim. He's a South African guy. He decides he's going to go on a trip to America. How fantastic. And when he goes, the exchange rate is, so $1 is 10 Rand. So obviously these are just for the purpose of an example. These are not the current exchange rates. How nice would that be? So he goes to America, and the exchange rate is $1 is for 10 Rand. And then he decides he wants to buy $500 so that he can have a great time in the States and have some spending money. For him to buy $500 is going to cost him 5,000 Rand. Now the way we did this, we did $500 times 10, which is the exchange rate. For every $1 you get 10 Rand. So to buy $1 it costs you 10 Rand. So to get $500 is going to be 500 times 10, which is 5,000 Rand. So he has 5,000 Rand to buy $500. So now he's in the States. He has his $500. He decides, oh, it's not that great actually. And he decides to come back to South Africa. He doesn't spend any of his money. He has his $500 intact. And when he comes back to South Africa, oh my gosh, the exchange rate has changed. It's now for $1 is 15 Rand, which is fantastic for Tim. This is obviously in his favor and allows him to make some money. So when he changes his $500 to get rands, for every $1 he has, he gets 15 Rand. So we do 500 times 15, which gives us 7,500, which allows Tim to make a profit of 2,500 because he bought those $500 for only 5,000 Rand, but now he's getting back 7,500 Rand, making a nice profit of 2,500. So if you really understood this example, that means you understand what Forex trading is all about. but it gets really good. The good news is that you don't have to wait for such huge fluctuations or changes in the exchange rate. Now, for example, in this example that we had this huge change from $1 to 10 Rand, from $1 to 15 Rand. You don't need such fluctuations in the market. Obviously, if you get such huge changes, that is either going to be to your huge benefit, like a huge profit, or unfortunately, if you read the market wrong, it's going to be huge losses. But the point is that in the forex market, you can make huge profits from small fluctuations in the market, and those small fluctuations we call pip movements. Now, in that video tutorial that I've been discussing how to place a trade, we do discuss what a pip is, how to calculate the value, how it relates to volume, and how you need to do risk management based on that calculation. We really go into it, and it's really an important video tutorial, and the link is available in the description box. So far, it's really easy, really simple. As long as you understand the big picture, you'll be able to grasp the other concepts that are coming along. Thanks for watching. Don't forget to subscribe, hit the like button. If you hit the like button, it means more people will get access to this video tutorial, will be recommended to more people. Also, leave a comment in the comment box. We do reply, and don't forget to hit the notification bell if you want to be the first one to know when we've uploaded a new video tutorial. Thanks for watching.